just real quickly here, and then we can also cover, I want to cover gold, to be honest. Because initially when we were looking at this, we were measuring off the annual ranges, like back here. And we have some upcoming flips here too. But like more importantly, like these ranges we're working off of. But when I went back and looked at this, I was like, okay, well, now that they kind of cleared these areas here, like we already know that the bigger targets for gold now would be closer to like that 5,700, 5,600, so on and so forth. Like there's going to be a lot of overhead around these marks in here. But my thoughts are, these are kind of structured around the mid-month. Do you guys see this? Like the 15, 16, kind of like when, basically when it continued, when it like gave odds of continuation. Are you guys tracking with me? I can't really clear the chart because then it would be really hard to like give you the exact idea, but it's like roughly 588 points. So when we looked at it from the start of the year, okay, kind of like these ranges in here, give or take, like right in between here. This is kind of where the continuation happened, okay? And especially if you're measuring off like the low range, this right here. When I went back and I looked at it off the mid structures for end of the year for like 2025, so like this right here. And then when I looked at it from mid-range from like January 14th, 15th, 16th, this would have been like mid-quarter, correct? Or mid-month, sorry, not mid-quarter. Like these are dates in here, like kind of like the mid-bars. Are you guys tracking? Kind of like this little, kind of like a little bull flag that formed. You could see it more clearly on a 3-day, like this in here. It's too bad that they don't do half-day intervals because it was really clear on that, but when I went back and measured off these ranges in here, I could see that, okay, the first bigger spot was right around here, okay, and then this should be like 8, but it's fine. And then in here, and then you guys get the idea, but basically off these ranges in here, okay? And if you pay attention, you can see where they structured like these open, close, highs, lows. Do you see what I'm saying? Where's the January 2nd? This is the January 2nd here, okay? This is the yearly candle open right here. This one here. Okay, so these would be off like the yearly open, yearly opening highs would be right about here. So my thought process was if they basically sustain these ranges here, then they could have a nice structural hold. And it seems like every time they moved in the smaller ranges, I know we were looking at like those 89-point intervals, but kind of like on that downside range stick, they're quite similar, especially in terms of like the overall range that was broken in between here. Like an open to close metric. Do you guys see that? It's like close to like 205 points. Okay. So then when I went back and looked at this off like these mid structures, I was like, okay, so then clearly if it hits this area or sustains during mid-range, and I didn't look at the full range here, but we can look at that. Then we could see some really good clearance breaks, and it's pretty obvious, like the way that they cleared in this spot right here, like on the 20th when they had that gap up. And I'm pretty sure that was the break of like those 89-point intervals. So if these were the first spots that we were looking at in terms of highs, lows, so like, and you see how it aligns so well with like that 23rd candle, and then this right here off the 21st, kind of like towards, I guess you could say like end of or mid, towards like the 3/3 mark of the quarter or something like that. This is off like those highs. And then these we had said were measured off like the mid quarter ranges. So it's quite clear that if they're holding above here, they don't want to return back here. Okay. Let me delete this so it's not confusing. Hold on. Okay, so if they're holding here, like above here, then they're trying their best to avoid returning to this area here. Okay, kind of like where that flag started that we talked about. And that's why I was saying like gold is on a very big structural break. So right now off these increments, they already, I don't have these spots marked on here, but I would mark them. I think I have them marked on my GC chart, but not this one. But I would definitely mark like some of these like mid intervals. So like 5225. Do you guys see these? 5187. Okay. We obviously had the 5120, 5124, 5130 marked yesterday. Like these are really important support spots. Like I would maybe mark these in like a different shade, but this is basically sustaining these structural support areas here. So those support lows, 5120s and 30 support lows, 5170s and 80 support open. Okay. Like off these bars here. 5190s support the closing range. 5225, like the 5220s basically support the highs, okay? And the 30s. Like, do you see this? Off these bars. So those would be the areas that I would imagine if they sustain, okay, like off 522225, whatever, just like this area in here, that they are likely to have continuation, okay? The spot where the gap is where it could be, are you guys tracking with me still? This is a little bit confusing, but the spot that where the gap started here, so like from here, okay, this right here, sustaining these areas in here, this is where, which I think is now going to be like half this range. Like that's basically the 5250 area, like 5247 or something like that. 48. Okay, this area here, I'll mark it in yellow. That becomes a crucial support now because that basically means it's going to sustain this gap and then you could get continuation. And I actually haven't counted this yet, but I wanted to see how many bars we have so far. So we have 1, 2, 3, 4, 5, 6, 7. It's a 7th bar. 7th bars usually do what? What happens during the 7th bar? These were the mid quarter. So this is now the 7th bar on this flag break. Okay, so they had a total of 7 bars here. Okay. What happens when you hit 7 bars? And it's crazy because it's breaking exactly 587 points on the 7th bar. Maybe someone start a thread in here so that it's easier to track. What could that imply? So the 5-250s are basically the 588 point gaps or breaks above the gap, okay, from where the flag started on January 20th. What could that imply for us? Specifically today, because we did have some odds for today on silver and gold and before month end. What could this imply? And I think a lot of people wouldn't see this coming. So obviously that would imply continuation, you guys. Seventh bars are usually expansion or exhaustion scenarios, but so my thoughts would be, I wanted to see if highs, are you guys tracking? If they trigger close to that 588, whatever that exact range is, point range today, or like ideally before month end, so like before the 31st, so that only gives us today and tomorrow, right? So it's around 5,351, okay? Somewhere around here. That kind of a structure break right here implies that they could expand, you get it, and continue, which could give us another 589 points above, okay? At a minimum, they could do like these ratios here, and I feel like these are, like you see this, these are probably almost exactly the same as this gap right here and where they broke. It is. So we can start using 332 point ratios if you want as like the midpoints. And I would imagine that this is probably also 332. Yeah, it is. Isn't that crazy? So let's see. Maybe like 332 points from here. I just want to see what it equals. I mean, that's pretty close. So like what, like 44 or something? Mark these on your charts. So I haven't even updated my actual chart yet, so I have to go back and clean it up a bit. But this area is a huge overhead, okay? So around 5,342, 44, 48. Once we get to the 50s, that's how we know that this is clearing. So this is basically going to be a sense of expansion or exhaustion. This area down here, where's, how do I turn this off? This area down here was that crucial support, okay, in this area here. And obviously the 5120s yesterday is where we really wanted them to get that big structural break. But even look at where they held back down in here. Like, none of this is a coincidence. These are such calculated spots for this to hold, break. And this even made sense here too. Like when I went back and looked at this, I'm like, oh, that makes sense why they stalled a little bit there, because they breached a little bit down here. Do you see it? It was like a 16 to 18 point interval. So it just implied that when they do come back and break, the second point around, they're going to have to give us a very similar like structure. Down here, they held exact ranges. This is pretty crazy. Look at the liquidity that came in right here. Okay. Again, you needed liquidity at the 5120s when it broke, which we got yesterday. This was a really big structural break. I never actually went and measured this yet, but I just wanted to see when they actually cleared these areas. I never went back and looked, but I wanted to see if they basically sustained this type of range, and it looks like they did, like off that highest stick break, which would be, I guess, close to here when they broke yesterday, right? That was the stick break of 5133, right? Right here. Do you guys see it? Maybe let me put this in a different color so it's easier to see. This right here. Okay, so basically for yesterday's continuation and that expansion to have occurred when we broke our 5120s and 30s, they basically had to hold above these 5150s, because that would offset like this volatility risk of coming back down to here. And I would say they did a really good job of doing that. They never brought this back down to this area here, and they just continued but I've noticed these intervals being pretty common. And right now, this is kind of the areas that they're stuck in. I noticed when they made the higher high here, though, like if you're looking, do you see this? This is actually pretty insane if you guys listen really closely. I'm going in detail here because ES is stuck and we already hit our weekly targets on ES, so I don't really care. But this right here, when I looked at the intervals, these are basically the overheads for real time today. Okay, kind of like in this area here. I don't know if you guys can see that. And they did, or is it close to here? They stalled right here, okay? Then they brought it back and they just took it out. So this is why I'm thinking they could definitely try breaking these areas here. So right now when I'm looking at this, I just want to see, this is probably why there's some support right here. Do you see it? In here? Do you guys see where it's stuck? And how it's stuck exactly in that exact same range? No one's going to go over this in this much detail with you guys, so like try to at least listen, because I'm also taking away from my trades right now too. This is really calculated right here, okay, in these areas. So them breaking this, and specifically today, this could give a massive expansion break on gold. So my thoughts were for today's session in real time, if they do come back and break this, first overhead, I wanted to see if that 16-point ratio or 18, 19 points, whatever it is, aligns with this, with that calculated spot. We just looked at a 5,342.43, and it does. Do you see it? Look, it's right at that 4.3 mark. So that's perfect. That means that the real-time ranges that are occurring are indeed intact with the calculated ranges that we calculated a few months back. Okay, so this is tracking really nicely. So basically gold right now, guys, is kind of working in like these 19-point real-time intervals from highs and lows, off highs and lows. Okay, so that's something that you can start tracking going forward, just to kind of see like once it starts getting stuck. And all I'm doing is I'm just tracking it off the initial break right here. Okay, so I already knew that there's going to be some overhead around here. Okay, when they actually took out that overhead, I want to see, okay, like there should be some structural supports down here. I also want to make sure that these breaks right here, okay, like you see this break right here right now, that's perfect. So obviously I want this to break 18 points off the highs, which should align to our 5,344, and it does. That's actually insane how perfect that is. And then lastly, the areas of clearance are obviously going to be off these ranges that we just calculated around 5,328. So on a break of 5,340, what did we just say it was? 44, 42. We want to see a break that 4.6, 4.7 spot, which was also our calculated range when we looked at it off the 588-point metrics on the daily. Okay? The really big breaks are going to be if they get it to these 50s. So these areas here should align with that too. Like this break right here, which is the same thing as this 18-point hold here, okay, off 5,338, should align with our 5,350s, basically like that 5.5, 5.7, 5.6, basically this area here, okay? And then max range, I would say off the 5,342, 43 is going to be around those 60s. So can someone just make a comment that Izzy thinks that the 5,350s to 60s are massive expansion ranges on gold if they clear these areas here? And when they clear them, we want to see if they basically clear them by these point intervals, okay? So if and when they do clear, like these spots, we basically want to see if they end up clearing them. So that would be like the 3.5, 7, 5.6, whatever. We want to see if and when they clear, if it gets to like 5,375, okay? That would be the equivalent of getting a mass range break. And this is on, I I feel like that would be it. That should be like the max range. It's around, it's basically under 5,400, okay? But like between these areas here, that 50 point range is huge. So the first major trigger is this 5,342. Unfortunately, I have to clear the chart because I deleted it. I don't want my chart deleted, but I have to go back and reset this. But that was just a very quick demo for you guys, okay? Now I have to go back and add these. I'll do it later, it's fine, but... Or actually, you know what? Why don't I can make a copy of that and then... Oh, it's too late. I was gonna say I can make a copy of that and then save that and keep this, but it's okay. I just wanted to go over it because I haven't had time to... Like, I have these areas memorized, but I haven't had time to actually go in and manually update this, but you guys can go back and review this if you want. So then you understand, and write notes if you want on your chart too, so that you know where these support ranges are coming from, like what's coming off a mid-month high versus a mid-month low. What can get you back to a mid-month high or a mid-month low? What can get you to make a new monthly high versus sustaining your monthly lows? Does that make sense? Like, price levels are supposed to be engaged to highs, lows, open, close, okay? And the reason why they revisit there is because it's linked to a calculated range at that area. Does that make sense? Like, none of that. I don't like when people just randomly put support or resistance on their chart. It has to be linked to something, and it has to be linked to a specific time or price. Or and silver flips tomorrow, I think. I couldn't remember if gold does or doesn't. I thought gold was all the way through till February 2nd and 3rd, and then we had that extension through the 6th, but I remember silver had that flip date tomorrow. And this was off that flag continuation, so that's going to be the 3rd bar. And silver also broke our 116. Right now it's kind of stuck beneath there, but it did a really good job of holding that 110. Also on gold too, I noticed something else, like that. I wanted to point this out and then I just forgot. This, remember how we looked at this range right here? And then we looked at this right here. I'll just clear this real quick so you guys can see. So like measuring off this bar right here. Okay, remember how we looked at this, like the 588? And then we looked at like off this gap range right here. Okay, so basically like right around this area here. And we said that that's going to be an important structural hold today. I'm just measuring off where the actual gap started to, okay? I just want to show you guys. This is the last thing I'll cover on gold and then I'll shut up. This isn't super accurate either. I'm trying to get to the point, obviously, but this would be off. This is off close, okay? So you see how that is off close and how it's linked to open close. This is really important that you guys start understanding these metrics, okay? And off highs, okay, would be off of here. Do you see it? This is off highs, close. So that's why I'm saying, I'm just recapping in case you don't understand it, because this is very important that you understand, especially since we know the calculated intervals that we're working with. So off these high ranges, the point I was trying to make, okay, is if they hold 50% of that range, then, so that would be off of basically here, okay, and here. Where is it? I would bet anything it aligns so well with these mid structures right here, okay? And again, that's off the open. Do you see it? Look. Make sure you guys are paying attention because I'm covering this in real time. Do you see that? This open, okay, is 50%, and this close. So it makes sense. So do you understand why I would end up saying today, oh, the minimum area I'd want to pin today is ... Does that make sense? The calculated range to hit highs by 4 p.m. is ... Do you get it? So in real time today, we'd want to see sustainment of these areas here, Okay, these would be the calculated ranges in terms of where they need to hold. And these would be the calculated areas of where we'd want them to close. Well, I don't know. I made it up, so I don't know. Whatever name you want to call it. I just always say I'm an open close trader. So this is really interesting. Yeah, exactly. And it should be around these 3555, 3557. These areas are huge. Okay, and this is where you want to see the most aggressive type of price action. Like, look, so far we're seeing it. We had 5338, 44, 43. Remember when we just looked at this? Look at the price action here. That's the kind of PA you want to see, because these are cleared spots against the close that are directly correlated to highs and close. Okay? So if they had like an overnight reset, retest, you basically obviously want to hold this area here, but ideally these areas here. And it's crazy because this makes sense. Like, look at where they held here in real time. They literally held this 50% spot. Do you see it? So another thing that you could do is you could maybe measure, okay, off the actual areas that occurred, just to kind of see where there could be a mass overhead. And I would bet money it's around that 5,357. Yeah, it is. Isn't that insane? Like, you have to admit that that's actually crazy. Like, the math that goes with this. So, long story short, if they clear this, especially since this is the 7th bar, I wouldn't be shocked if, but basically this could take gold to 6K. Okay, this would be like a 6K potential break on gold. Not exactly 6,000, but like 5,800s, 900s. Okay. This is really fun to watch in real time. I just wish I didn't delete that chart, because now I don't even have those spots on here. But that's okay. And look, ES did nothing. Isn't this insane too? We said whatever zone ES is trading in, but by the 2 o'clock window is going to determine whether or not we get continuation today. And they stalled neutral, which means they could stay stagnant. They also held 698, and we also hit our weekly targets. Our weekly targets were 70.38, 70.42, with odds of expanding to that 70.52 to 58 on the week. They stalled our calculated ranges of 38, 41, 42, which we've talked about a bunch over the last few days. So ES doesn't really owe us much more this week if it doesn't want to. Obviously, I want to pin in this area here today, just to give us better odds. Another thing too, yesterday with ES, I had to sign off, but remember how I said if they don't break by that 330, 336 to 350 window, they're not going to get that structure break, and then they ended up recycling it back to neutral, because I said that technically they could still pin anywhere between 70.05, 06, 10, 12, 18, 20, 22 was pinnable. So they left it neutral. I feel like this pin into yesterday's close. Where did they pin exactly? 08. Okay. These areas here, this is probably what allowed ES to not have that continuation. So, and it was those 12, 13 point ratios again. Not that it's a bad thing, but had they pushed it just a bit higher, okay, then they likely would have had some odds of extending or expanding this on the week or today. And I bet anything these would have been linked to like the 70.55, 70.58. Okay, so where they closed us yesterday around 08, if they had actually closed us near that 2.7 calculated spot that we looked at. Are you guys listening? Because we said that yesterday had odds around 237. I still have them marked around 2375 to 27. If they had actually done that today or yesterday, that's how we could have had odds of the 70.52 to 58. Does that make sense? That's how that odd would have come into play. So them keeping it neutral implied that they would probably take it to this neutral zone into Fed. Okay? That's a neutral close. And that's why I was saying, if that's the case, it's so crucial that we hit 70.28, 70.32 and retest highs ahead of FOMC. So before today. Okay? And we did in pre-market or overnight. And off highs too, these areas should basically be linked to that. Like that's just like the range differential, which in theory is just that 32 points that we've been talking about over and over and over again. This is basically where they closed us yesterday to where they hit highs. I would bet money is that 32 to 34 point ratio from close. Where did they close? Exactly 09. Yeah, look, that's exactly 33.5 points. That's insane. So we probably want to pin at least around that 08. Does that make sense, you guys? Like 0875, because that would be like the 34 to 33 point ratios. So that's why this close could just be very, very pinnable. We ended the day neutral. We opened the day neutral. We went into Fed neutral. We already hit 70.38, 70.41. I don't have to go back and copy paste everything, but anyway, these are all on the report. And I did the stream on, and I said that those areas were also linked to those ratios, so it made sense that they would maybe stall 70.41 this week. I have those notes for whoever wants them, by the way, from that stream on the 23rd. Who wants those notes? I have them saved in a PDF from that transcription bot or whatever. Oh, actually, Bale took really good notes in here too from Sunday. And so did Lai. So basically, if they keep it above 03, like those neutral spots, that could still give you an odd of closing around 70.36. We actually went over this not yesterday, but the day before. This is actually insane too, guys. Look at this. This was the math I did on the 13th of January. And these had the highest odds on when and if they take out highs, the areas that they could potentially stall at. So, and I didn't do it exact. I did 70.35 plus 7, but I think the actual high was, what was it? 70.36.25. And what did they trigger today? 43. So that would make sense. Do you see that? So if you did those exact ranges, because that's 70.36.25 would have netted us 70.43.25. They stalled 70.43 today. That's extremely calculated. I'm gonna share that that was from the week before. Those were, you can go back and read those if you want to. It was just the calculations I did that day. And I think it was because they were selling it. Go back and study this, because this is a really good example of why and how those areas were calculated. Okay? And the 13th was a very, very, very important date because that was ahead of our 14th flip date. That's what would have allowed continuation. And then yesterday I was telling you guys how that 41 and 38 are linked to those core areas or core ratios, which all that really means is off like the weekly close, like that 693375. Do you see that? That's a core ratio. And we said we're not going to get any major structural breaks until we get like 173 point range break off the lows, which should be around our 70.52. Which is probably that 42.5 off open. That's crazy. Remember how we were looking at those 42.5 point intervals last week? So that basically is 42.5 points is aligned with the 173 points off weekly lows and in line with today's open and yesterday's close, because market's been moving in these ratios. So 70.52 remains really calculated on the week. And then off yesterday's highs, there's that 33 points coming in play again around this area here. So market's definitely still moving in those 32 to 34, 44, 42 point ratios. Do you see that? So when you break 4243, you have odds of getting that 70, 51, 52. And it's pretty evident, which would also be the same thing as hitting 173 points from this week's lows. So if you were to extend 42 off here, that's how you could get stuck in the means, like 70, 60, 61. And this is how you'd get those bigger range breaks to core areas, which I don't really see that happening this week, but I would bet money that this is linked to the actual opening range here. Do you see that? And this is closer to like 32.5 or 33.5 based on what they've been ranging. Listen closely, guys. This is actually really interesting. So 70, 76 has a lot of confluence too, because if you measure off the actual high that occurred at 70.43 and then off this week's open, and that same sort of thing, 33.5 against that 173, they would net you that 70. This is off. This is now off weekly open, okay, and weekly highs. So this is really interesting. So there's alignment on both ends, basically off the close or off the open, off these closing ranges, off yesterday's highs, and off that 42 to 43 point ratio. Long story short, if we can close at a minimum of 70.03 to 70.10, we still have odds of triggering 70.52 on the week. Okay, with 70.38 and 43 being a pretty big overhead. And these are probably also those 42 to 43 point ratios here too, or pretty close. And you could also, another thing that you could do, I guess, is even measure like the range differentials here, like in terms of that. So that could be the extension. Like if your highs break, they might end up doing a similar type range. So like I would just go between 17 and 22 points just to keep it tracked. But this is like between that 23 to 52. So this is why there could be some confluence around the 6.6. Okay. Again, a lot of overhead around 4.2. Do you see that? That's pretty interesting. Do you see the same confluence on downside versus upside? It's the exact same thing. That's really cool. So that's the range differential between the lows here at 68.14 and the opening ranges back down in here. They're like 23 to 24.5 points. The exact 23 point ratio off yesterday's highs is 70.43. So I think when and if they break 70.43, it probably means that they're gonna have to break. This is 70.18.5. I would write this as a condition They would have to break, oh, that is exactly it. They'd have to break exactly that 70.43, 70.43.25, basically. And that's what would open up the odds of getting 70, 66, 68, so on and so forth. And look, this is even linked to that 70-60 that we talked about, which was the same. That was the same thing as getting the 42 points here. Do you see it? Let me clear this so you guys can see. Okay, so if you're measuring the same sort of idea here on upside versus downside, okay. Do you see that? These areas would have your heaviest overhead. And again, these would be the same thing as, these are our 227 point ranges, guys, that we've talked about over the last few weeks. That 220, 222, 224, these are them. They just hit a 228.5 ratio. And that's that 32 point differential that we still have yet to break. So highest confluence for ES is 70-60. Basically, if we break 70-44, we're already at an odd of getting to 70-66, okay? And that these areas here would also be the same thing as breaking our 256 to 257 point ranges, so 70-71 to 70-76. Those are the core breaks. And I think just as a recap, off these closing spots, this would give us those odds of getting into the zone. Do you see it? Like 70, 88, 93. So ES is basically just stuck into the close here. We only have 15 minutes, but I think they'd probably keep it stuck. Whereas gold is still triggering these bigger breaks. Let me just mark the levels so that I have them, since I had to delete them. Did you guys trade gold into the close or silver? There's also those monthly structures on gold and silver too that we've talked about on the 10-month, 11-month, 12-month, which there is, I have to go back and double check. I don't remember what time frame it was that flips on February 1st, but that's another reason for like these extensions that are occurring. And this is what can allow for those massive range breaks that we just looked at, especially on these breaks of like 5,375. I'm just going to mark them on here so that we have them. 57, 42, 58. That could give you that bigger push off these ratios to, I can't see what that low is. It's hard to see. Hold on. Yeah, those are the 5-7 spots. So this kind of action, especially at these areas here, is super important. And then we had our fib that we measured from here to here, I think. Of the 70s. I'll have to go back and double check that. Oh, there you go. These could be the final things into the close here this afternoon. Okay? Silver, on the other hand, broke that 116. This was also a really, really, really clean move. Targets on upside for this one are like that 120, 121. That's actually insane that these actually already hit 495 because 500's pretty freaking close on GLD. I'm going to have to chart GLD maybe tomorrow because I don't think I have an updated chart on that just to see what the range differentials would be on that. Can someone actually check if GLD is tracking those 88 to 80 or 83 to 89 point ratios, please? Like even SLV just triggered 106, so you could basically recycle that, meaning 110 would be like the bigger overhead, I would say, for SLV. But this is where I think we could start seeing some pretty big volatility into the close. Which is why I'm mostly going to focus on gold and silver here into the close, because I think this is where price action could get like parabolical, especially off these areas. Like these are really, really big spots. I'm going to pull up silver and gold at the same screen. I wish I saved the other template for gold, so we had all these ranges in here, but it's okay. Because I don't know if this is accurate. I have to go back and watch my own stream to double check that. This 96 trigger is insane though. The fact that we knew 96 triggers 103 and 103 triggers 116 is crazy. So our bigger target's obviously this 121. I'm just going to set some alerts around like the 118 area, but technically speaking, gold doesn't really have to go higher here because all it really needed was around this 347, 356, 375. So it's kind of just if it really wants to push and expand to its max range, it would come to here. If it wants to just kind of stay put, it would stay here. And if it wants to just go back to these areas, it would be here. Does that make sense? Like this is kind of like the mid-range for gold. So And silver would be the same thing. I would say that there's probably some mid overhead around 118. And if it wants to just stay put at 116, that's also okay. And then if it wants to fully extend, that's closer to 120. I didn't think that we'd get there until tomorrow, because tomorrow's the flip date on silver, but so I'm still going to hold my weeklies on that one. What do you guys think? ES is also kind of just stuck in these neutral spots here. Definitely have to watch the 5455 on ES. I would say if ES can clear 7014 in these intervals here, then it has some odds of getting to the 70, 22, 23, 24, which, like I said, this would be a better area for ES. Why is this not marked properly? That's the overhead here. It's around 7014. So if ES can break this range there into the close, then it has decent odds. Silver needs to get back over this 117, I would say, by the last, like, 5 minutes into the close. Either way, these are all pinnable spots for ES, silver, and gold. So it's just kind of whether or not they want to have an extended run into the close here. What do you guys think? I feel like a lot of these are going to stay a little stagnant. All right, let's see. So ES needs to clear 7014. I set some alerts here. I would say no later than 56. Okay. Otherwise, those odds are pretty low. How much time do we have left? 3.5 minutes? What do you guys think? Do they just push the close or do they keep it stuck here? This is a really calculated area to stay stuck on both gold, ES, and silver. If they want to clear, I feel like they'd probably push final minute. And you could see this is kind of an overhead for both. Just like this is a big overhead here for ES. They tagged 7013 so far, so I don't know. I feel like to me this looks like they could keep it stuck unless they did like a final minute push at like 358 over 14. Then maybe it has odds for like 7018, 7021, but otherwise that could easily stay stuck. Gold and silver, same thing. I feel like silver would probably have to push over 117 before the final minute, and gold would probably have to push above like 5,386. Otherwise, they just keep them stuck in these ranges here, which there's nothing wrong with it. These are huge spots for both silver and gold. 116.54 is huge on silver. Even being anywhere remotely around 5,375 is insane on gold, because this still implies that they could get breaks to 6K. It's going to be an interesting final 2 minutes. We'll see how the first like 15-30 seconds react. It's pretty insane that they're bringing it right to 70.14, like right into the final minute here, and that they're stalling exactly these ranges here, like right at the final minute of the close. I feel like if they're going to break anything, it's probably going to be after the bell here, since they kind of kept it stuck, but yeah, see? They're going to do it like right at 4. That's insane. That's hilarious. That looked like so obvious that they're going to keep this stuck right into the close. Yeah, but that's what happens when things are pinnable, unfortunately. That's why it was important that you had to clear these areas here before 59. Like, usually staying stuck beneath before 59 can typically imply that you're getting stuck. Like, even this is pretty insane. Same with ES, like exactly 14. At least we know the exact ranges. Like, knowing that this is beneath 14, this is beneath this 17 area, this is beneath this 8. We have our ranges exact, which not many people have, so at least we have that. This is a really, really good close on silver and gold. So I kept my calls for Friday. I still have my February monthlies, but I might have to start rolling some of these. Silver does flip over tomorrow. I think silver had, if I'm not mistaken, the 8-day flag, and that runs until the 6th. And we were watching the 4-day on this too, which is what continues until month end. So same with that 3-day, 1, 2, 3, 4. And this is, I think, what flips on the 29th. Yes, it's that 3-day. And this is 1, 2, 3, 4. That's the 4th bar. So 4th bar being an expansion stick, meaning this could easily continue. And the best day to trigger that 120.82, 121 target would be tomorrow on silver. Oh, it shouldn't be stuck. I don't know why it is. That's strange. Maybe that's just OBS. What about now? So that 14 stall there, like I was saying earlier this afternoon, they're not going to really get any major structure breaks until one end breaks here. So I'll just copy paste. It's the same idea. So once 8-8 breaks, and especially on a stall of 14, which is what they're doing here, you can get triggered back to 6, 7, 9, 6, 9, 7, 9, 6, 9, 7, 8, basically core ranges. It's the same thing with upside. If you can't get a structure break above this 14 and fail to sustain 8-8, that's kind of what would trigger. It's a core to core. These are core areas down here, basically. And these are core areas up here. And they just basically left it neutral. We also have earnings, so that's going to be a big mover for end of day. But them stalling neutral into the close. They still held over 70.06 though, so I feel like that could still give us odds of bringing us back up, especially if they hold off that 7.1 to 6.6 area. Because remember, we still had, even though we did a great job of sustaining 7.1 back here, technically if the market wants to revisit 5.8, 5.9, 6.6, it's not the end of the world if it does. This is still a pretty big support, especially since we've already... What can help us reduce risk? Actually, this is a good question. Into end of week now. What's something that could help reduce the risk that we have? Hitting these core areas is fine. It makes sense since they're basically triggering both sides of the trade right now, since they stalled the top of the zone today at 3.2 in real time. They couldn't get any structure breaks over our 70, 28, 29, 30, 32, which would trigger core ranges back to the 70s down here. What could help us sustain, since core stalls but neutral closes? So they opened at 70.06, 70.08, 70.09. They closed at 70.06. What's one thing that could work in our favor here that could maybe help us sustain these core areas? The fact that we triggered our weekly targets, right? What were our weekly price points that were extremely calculated for us to trigger? $70, $38, $70, $41, right? So we triggered upside. This could easily reduce the risk that we have for end of week, which is what could maybe keep us like core to zone bound, I would think. Market doesn't really owe us anything above here anymore. If they wanted to, that's where I think that 52 to 58 area could come into play, but realistically speaking, we're not really owed anything above here. If you want to go back and review, I'd say the most important highlights from this week. Did you guys like that visual too that we looked at? So I think this was... This still stays the same. I don't think any of that even changed. And then from the weekend notes, these were the short notes. Yeah, I liked it too. 70, 41. So the interesting thing here is they're still holding over 70.01 in terms of where they're closing, and they did trigger 70.38 and 41, but that doesn't mean that they can't keep like that volatility in play. And this is from the prior week's report, just so you guys have it. That's why those areas are calculated, okay? Just so you don't forget, that's why those areas are extremely calculated. And we just went over a few other reasons why in intraday, the smaller ranges of like 22, 32, 33 points also have them calculated, but that's the main reason why. Okay, so basically hitting these areas protects us from revisiting 68.60s. Does that make sense? And the 68.60s are linked with the 256 point intervals of 6771, 6778. So long story short, you testing here, okay, basically gives you odds of avoiding coming back down here, okay, which gives you odds of avoiding coming back down here. And these were all really calculated spots. These were the 256 point ranges. Okay. These I'm pretty sure would be 256 up here. I'm just recapping this because I feel like a lot of you probably forgot. Okay, that's why this 3.8 is so calculated. 3.9, 3.8, whatever way you want to look at this. This could be off by a tiny, tiny bit. Hold on. Okay, everyone's on the same page. This is why these ranges were really calculated for us. Okay, so this basically helps us avoid coming back to the 6700s, 6770s, which obviously could help us avoid coming back to this area here, at least for now. You're not going to get any very big progressive structure breaks, though, until you obviously come back all the way to here, which I don't really think we have to do that right now. And in terms of an open close, this is why getting back over 70.26 for the week and closing there is going to likely be our minimum condition. So I still would prefer that they can try closing the week above these ranges here. Okay? Does that make sense? And this is what could end up making it a pinnable type of Thursday, Friday, because they've already triggered technically enough to be considered a max range. Okay? Especially when you're looking at this from like an open close ratio. Do you see this? These are open close ratios off our structures here. Okay. Which doesn't really give us a lot of room, I guess, for odds on the week, but it does make it so that they make it essentially pinnable between the zone and channel with odds of revisiting core. So I don't really care if they come back to 69.70s, but I would prefer that they try at the least getting back over these neutral spots, so 70.03, 70.04, 70.06, and try ending the week back over 70.26, preferably in the channel. I think if they can end the week here, that would be fine. We can still leave that 70.52 to 58 target for the week, but I don't think it's required. And this 70 or 69.78 hold was really good right here. This is a really solid hold into these earnings. Okay, so this is a really good core hold. And like I was saying before, usually if you stall neutral, all that really means is you're basically undecided and you have odds for both ends to trigger. Okay, so 70.14 stall into the close, that's extremely two directional, and I said that this morning too. So these neutral stalls, all it really means is they can trigger both ends. Okay, so it just means that they can come back to the 69.70s and then still take it back to those 70.20s. So hopefully they can get it back there and close there, because that would be the best case scenario for us. And it just means that we could stay within our ranges. So there's basically a wall. I'm just copying and pasting what I said this morning, but there's basically a wall on each end for core areas to trigger. Okay, so and core areas basically means 69.78, 69.71, or back to the 70.20s, 70.30s. So another way that you can look at this is you can look at it as the same in terms of range, whether it's above the zone, let's say 8887 over 14. Okay, so this could be one way of looking at it. It should align with a 2-2, 2-4, 2-3. Okay, or you could just look at it as max range from, you can measure off open close if you want, or you could just measure off the zone stall. I would measure maybe off the zone stall just because that could maybe give you a better idea of like max range scenarios. And this should be linked more closely with that 70, 51, 52. Does that make sense? Like this is how you could trigger an upper core range because the 50s are mid core. So there's that confluence once again. But if you're going to just measure this off kind of like mid neutral zone, like 6998, these should be more linked to like the actual zone itself, maybe closer to like 70, 36, 38. If you're measuring specifically off the zone, like we said, then that's where you could be limited to here. But I feel like they would give us odds on both ends. So 70, that being said, 70, 52 could still be in play for the week. Okay? All relative to where they end up pinning this. If you measure it off open close, I think it's going to be maybe closer to that same ratio that we just looked at. So off open close, probably that 31 to 33 points. Yeah, it is. That's pretty insane. So same thing that we looked at earlier. Okay? Where did they open and close? This right here. So it's roughly 32, 33 points. This is off open close. Where did they close real time? Real time close. And I'm just doing this for you guys real quick so that you guys have a really good idea of this, okay? I would also measure the 4 p.m. stick because that could be like your volatility if they expand range. So all I mean by that is if we measure this, this is probably 33 points. Yeah, it is. That's insane. So that's exactly 33 points from that low to open. Okay. Do you see that? That's where you could maybe take out that high. Do you see how it's linked to that 70, 43, 25? This low should be linked to your highs in terms of where you opened and closed. Okay? And we already know that 70, 43, 25 is calculated. That's the 173 point range. So if we measure off of here, that's why you'd want to get to maybe back to 70, 25 at a minimum. Do you see it? If you had like an extended range, this is how you could get 70, 58. I'm only going to cover this once just so that you guys are prepared for end of week. I'll probably put out some short notes tonight. I feel like the stream has more than enough to cover, but just in case someone... And the reason why I'm saying you could use this 14 points here is because I was thinking off here, this is probably like 50-ish points, but that could be an expansion or extension off open close. So this is where you could get maybe limited if it was something like this. Okay. Do you see what I'm saying? If they don't break these neutral spots. Whereas if they do, you could still get stuck around that 70, 25, 70, 32, 70, 40. I feel like most odds are linked to here though, like the real-time close and session, open session close. So off session, open session close, that's linked to 70, 35. So basically back to your previous highs. Do you see that? This area here. That's linked with today's real-time close. This is off real-time close to session lows. Versus off the actual session open, session close, it would be linked to this 3.9. That's off that 70, 10, 25, which was today's open. Okay? Does that make sense to everyone? I feel like this is pretty straightforward. This is just based off your open, lows, highs, close. Okay, so getting back over here especially around that 415 mark. And 415 matters too, since that's the real-time session close for options on the index. They took it right back to that 7009. So I would say, with that being said, 7009 has the most confluence. Okay? And if they clear 7009, you could basically measure that 29 points above and the 33 points above. So probably like around 70. They should link you back to that 7042. 7038. These are extremely calculated ranges. Everything remains the same. I just want to show you guys though why and how 7038, 42, and 52, 58 are calculated based on these lows, based on these opens, based on this close, and why we had odds of getting back to 7-8. Okay? It's basically a neutral zone right here. This area here gives you odds of both sides of the trade. Okay? Once you break these structures though, that's where you could start to expand. Does that make sense? And I'll cover this real quick too before I go. If you start to expand, maybe that's how you could come back to the channel. Obviously, we want to avoid doing that. We don't really want to come back here. Okay, if we hit around there, do you see that? That would be really risky because you could come back to 69, 47, 48, which is the top of the channel. Okay, that's on downside for the week. If they extended upside from here above here, at a minimum we could get to 70.53. I just want you guys to see it. Okay, that 70.58 break could give us the expansions to 70.66, and this is why I was saying I think there's a lot of confluence around that 7.1, 7.6 area. Okay, let me know if this makes sense to you guys. It should. It's really important that you guys have an understanding of risk reward, because if you don't, then you're in some serious trouble. You definitely should have a good understanding of how to measure risk reward, okay? And why areas are calculated. So the biggest area of confluence I would say is around, on the downside, the 69.40s. On the upside, the 70.66 to 76. That's if they had an expansion, okay? If they kept things kind of neutralized, they would basically keep it beneath 70.43, but above 70.10. On the downside, it would be like above 69.78, but beneath 70.14 or 22. On a mini expansion, they would take it to 70.52, 58. Okay, but likely keep it beneath these 60s. So we'll see where they end up closing this. A lot of this is going to be relative to where they close the actual session. So I would say a minimum close of 70.25 on today's session gives highest odds for core ranges to trigger. Basically 70.52, 70.58. And then odds of getting 70.66, 70.71. 70.76. Those are my max ranges for the week. I really don't see us going any higher than that. Like if they somehow push this to 70.88, 94, honestly, I would be surprised. I know I have it in the weekend report for like some probabilities, but I feel like based on these neutral closes, I don't really see that being the case. So, okay, hopefully this was a good recap for you guys, so you have an idea on the ranges we're working with based on where they keep opening, closing, taking the things into end of session today. Hopefully they give us a close at least above 70.14 to increase those odds of 70, 52, and 58. I did hold some calls overnight because I took tomorrow's expiration off the bottom of the zone earlier. And then for gold and silver, again, these are same spots that you'd want to see them basically just kind of sustain, close above, hold above, so on and so forth. All right, I will see you guys tomorrow.